And we have finally been able to reach a deal with the bilateral creditors and the Eurobond holders when it comes to restructuring of Ghana's debt, all these external creditors. But with all these developments, what would this mean for the larger economy that has struggled over the past 2 years and businesses? We'll be trying to get some answers to these issues on PM Express Business Edition as I engage the president of the Ghana National Chamber of Commerce and Industry, that is Dr. Clement. He's also going to join us in studio here, and also Yolate. He's a partner at accounting firm Deloitte, and also an economist, Dr. Edusa Kodie. Let's talk about the economy, let's talk about businesses, the debt restructuring program. What would this all mean for all these critical sectors and players? We'll be right back after this break. Welcome back to PM Express Business Edition as we talk about the restructured deal when it comes to the Eurobond and the bilateral creditors. And what does this mean for the larger economy and also a critical sector, this economy, businesses. And this is what we'll be doing tonight on PM Express. We talk about the debt exchange program when it comes to restructuring the bilateral and, of course, the debts. And just a quick one to just run through us in the Ghana Debt Restructuring Program, Domestic Exchange Program, looking around 203 billion Ghana cedis. That is the debt service savings. You are hearing about 61 billion Ghana cedis. And this has to do with the Domestic Debt Exchange Program. Let's now look at the external debt, actually. You can talk about some $14.6 billion. Government rounded up to about 14.1 billion when it comes to the Eurobond holders. And then the bilateral creditors, you're looking at somewhere around $5.4 billion. The final figure being wrapped up was around $5.1 billion. And also focusing on the Eurobond, which we understand there is an agreement in principle. We're looking at somewhere two options here. There is the disco offer, if I could use that expression, and also the PAR. And Yolate is here. He's a critical finance person. He will help me appreciate all these things. And these are the two options that government has presented to these Eurobond holders to decide on which one they would actually select as well when it comes to these two options that government is presenting to these investors. Looking at the DISCO one, which will see government issue new set of bonds, actually. And then when it comes to the breakdown of these bonds, you've seen on your screen there in terms of the number of years that these new bonds will last, how much you're going to be paid, and all those things. And one critical question that I'll quickly want to get through is that is this deal a good one based on what they've actually put together, or government has put together, or reached with these Euro bond holders? Is it a good thing or not? And this is what we've seen here in terms of the short, the long bond, and also the down pay bonds as well. And these are what you've seen on your screens there in terms of the interest rates, as in the bond at par, as in the PAR. You're looking at something around 1.5, and also the down pay bond also 0%. So this is more of some breakdown for you in terms of under the API, the bondholders would forgo approximately $4.7 billion. And is this really a savings, or it is more of some deferred payment as well? Yolate is a partner at Deloitte Ghana. He's with me in studio. And also, so this is what we're looking at here in terms of the 13.1 billion, and then also when it comes to the bilateral, some 5.1 billion. Government has talked about a savings of $8 billion when it comes to the Eurobond, and the official creditors about 2 billion cedis. Savings in terms of what? We'll be getting all those understanding here when it comes to all these things. But before we get into the proper analysis of all these things, it's good that we have Dr. Clement, that he is the president of the Ghana National Chamber of Commerce and Industry. And it would be good to, before we delve into this, Doctor, find out from you, how are businesses doing? We knew that things were bad. Are things stabilizing, or it is still quite a challenging time for businesses and industries.
Thank you so much for the opportunity granted to me. Businesses have not been enjoying the environment that we thought the government was going to create for us. In that after the COVID, we have suffered a lot, especially when we are paying taxes on COVID levy, exchange rate relatively very high. The government projects around 13.8 by the end of the year. And as we speak now, it's around 15.3. Whatever you import from outside is pegged on dollar payments. And so it means that even though you might be paying similar amount because of the exchange rate, you pay so much for goods that you import. Some manufacturers also need some raw materials that they need to import, certainly. And so you are bound to pay so much for whatever you import. The taxes relatively very high, and you realize that it's difficult to break even. And members have been struggling to survive for so many years. And what I keep on telling them, look, there could be a better future. Let's see how we can sustain our business. And what I realized is that people who could not continue with that had to offload all their business, just lay workers off, and put in whatever they have and invest in a T-bill just to make a return. Here is also a danger of DDEP. You don't know what will happen if you should go and buy bond. But I said, look, can you look at investing in land and other properties as well as a way of, keeping your wealth? People lost their investment capital in that when assuming I've kept some money, about 20 million cedis in my investment, and the dollar rate exchange rate keeps on going up, then CD depreciates, you will no more have similar amount of money. So investment capital was also going down. And so it's not been an easy thing. We are just trying to survive because comparatively, we are not competitive with the rest of people in our continent as well as the world. Even to be able to even trade among them, we were not doing well because interest rate was also relatively high. Thank God we are seeing a better future as a result of what is happening now. And perhaps we'll discuss and dive deep into it.
And Doc, I'll be coming more. I mean, the bit that interested me was the bit about some of the businesses trying to downsize and even invest. And we thought that we have seen the worst, but from what I'm getting from you, we are still struggling in the quicksand. But I'll be coming back to you to get more about the survival mode and how you are managing and also in terms of the outlook. But let me bring in your latte. He's a partner at Deloitte as well. Put on the cap of an investment advisor. Put on the cap of advising me as somebody who had invested about $1 billion in these Euro bonds.
Yeah.
Let's look at the broader agreement from the perspective of a finance person. Is it a good deal?
Well, thank you very much. I think I would say whether it's good or bad depends on the circumstances of your situation. And the reason I say that is that the terms of the debt restructuring are in two fronts. So it depends on which of the options that we put on the table that you decide to go for. So like you rightly said in your introductory statement, we've got two different options on the table now. You can go for the DISCO or the PAR option. So if you go for the DISCO, what it means that the reason why it's called DISCO is that there's a bit of discounting or haircut involved. And so in that DISCO, you go for that option, you get a higher interest. So you'll be paying interest of between 5 to 6%. And the maturity for that, the repayment period is about 5 to 6 years. So it's a shorter period, but you'll be forced or you'll be asked to take a haircut on that facility. So instead of taking or being paid your 100 million that you've invested in government, just for the sake of argument, you end up being paid like 80 or 70 million over a shorter period. Someone will go for the PAR option. It's a longer term maturity, about 16 to 17 years. The person will get a full repayment, but then the period has extended from the 5 to 6 years to 16 to 17 years. The interest you earn on that is at lower rate than the DISCO or the discounted one. That interest rate is about 1.5%. So it depends on what we call your investment objective. Are you ready to do a long-term investment with government? If you are ready to do a long-term investment with government, then you go for the option that has a longer maturity. Because in that situation, you're not taking a haircut. But if you are ready or you are willing to take a short-term perspective to things, because the reason why someone will go for that option is that cash now, it's of more value than a lot more cash tomorrow.
Yeah.
Because the future is full of uncertainties. So I'd rather take a haircut, have the remainder of my money paid within a period of 5 years, than to wait for 16 years when you do not know what government policies are likely to be, when you do not know whether you'll be forced to take another haircut down the road, 10 years down the road. So if you are an investor, it depends on your investment objective and your risk appetite. If you are ready to take on more risk, go for a longer maturity, you get all your money, but over a longer period. If you are ready to take a haircut and cut your losses, you take the shorter maturity, higher interest, but then a haircut comes along.
Government has been talking about savings and savings and savings. And I know that very soon there might be a press conference to engage the media, but what is the real savings here? When some people are saying that it is just a deferred commitment. So the savings is that if it had not been this restructured deal, would have been paying X amount of money to these guys, and because of the restructuring, we can keep X amount with us and pay them this form. Going through this agreement again, where lies the savings where government is talking about $10 billion? And from the statement also, help us appreciate this thing here.
Yeah, so I think we appreciate a lot better if you go to the pre-IMF or pre-debt restructuring debt component. So prior to going to the debt restructuring process, we had about $30 billion of external debt. Out of this $30 billion of external debt, as you rightly projected, about 13.1 billion of that was owed to the Eurobond holders. Other commercial lenders also just around about 8.8 billion there. So if you add the two, about 60% of our debt was owed to Eurobond and other commercial lenders. The 40% are multilateral and bilateral. So these are guys, government to government, that you can easily negotiate. But the commercial lending was about 60%. So that component was significant. And so to the extent that we've been able to negotiate a haircut on our commercial lending, it's a significant milestone. Mind you, before 2023 budget, in 2022, our interest commitments was about 30% of our total expenditure, interest commitment alone. Over the years, it has always been compensation. The previous two budgets that we've had, interest commitment has outpaced compensation. That was a worrying trend, because what it meant was that you are using a third of your total expenditure on interest payments. So if government is saving 80 million, I think we are looking at it in this way. The proportion of debt that has been restructured, because some of these bondholders are going to take a haircut, it means you are not going to pay the principal, we are not going to pay the interest. So that's saving coming to us. And under the program, if you read the terms of the agreement, these bondholders are also going to inject another 4.4 billion over the period. So there's a savings in you not paying the interest and principal on certain portion of the loan facility, and also these same bondholders injecting over the period. Because in finance term, one of the ways of getting repayment of your loan is to help the person who has borrowed from you survive, do good business, raise the cash flow to pay you. There's no point killing the person or liquidating or bringing down the business. So that's how these bondholders see it, that they want to put us in a situation where Ghana will be able to increase productivity, be in a position to service our debt without the struggle that we've got.
And so for you, it is true, as speaking as an independent person, that indeed
there has been significant savings.
I mean, the minister has spoken about some $10 billion, and that is resolution on the ground.
Yes, there has been significant savings. I think what we need to do is to understand the component of the $10 billion.
Yeah.
Because there's an injection of 4.4 billion over a certain period, and then there's a reduction in interest that would have been paid. What we need to know is the component of this $10 billion, which I'm sure with time you'll get the information.
For businesses, they were worried about the delays in restructuring this and the delay and the uncertainty, and for a lot of you people who had lines outside and all the rest. Let me come to Dr. Clement Osei-Amoako. He's the president of the Ghana National Chamber of Commerce and Industry. For you, how do you take this news? Because I know for a lot of your members, for businesses, they have lines outside that had been blocked because of this uncertainty, delays in reaching an agreement and all the rest. For you, how did you take this news first from the perspective of businesses?
I think it's very positive. Why am I saying that? Everything that we do drives on what the economy is. And so if you don't have a good economy, whatever you do will not work well. And so for us to sit down and owe so much, for which the government imposed a lot of taxes on us, and some payments that we don't even have the right, we don't have the strength to pay, we're paying. You realize that this is helping us in that we are going to gain from debt stock relief. We are gaining from interest payment relief. We are gaining from, there will be some confidence into the system. There's a lot of benefit that is accrued to us. And when you, like you said, a total of about 10 billion, out of which we, with the 13.1 haircut that we had, we are getting around 4.4 million and then 4.7. Yeah. We have the 4.7 billion relieved, and then we have the 4.4 cash flow. And so it means that monies that hitherto we're going to use to pay for loans, now we have them to use for other things. The government wants to develop the country. And as I always say, when you're developing, you have to develop on productive sectors. And so that is quite not inflationary. And so if the government wants to construct road, it has a long-term benefit. If it's constructing hospital, it has a long-term benefit. And when these constructions are going place, the private sector that will benefit from it. Now, this wouldn't have been possible if we were not able to achieve this, to be able to even go back to the IMF and look at the agreement that we have with them. It was contingent on this. So it means that it gives us a better framework, a better opportunity to also go in for the 3 million that we have been disbursing, 360 every quarter. Now, here too, as a private person, we are also looking at importing raw materials from outside. We need money to buy goods also and services from outside. So it means that we have some injection of some foreign currency into the system, which the governor will keep it to support our imports. And so it means that we no longer have to struggle for people. One, the currency will be relatively stable. And if it's even declining, it will not be as it used to be. And so you will be able to forecast into the future. Even because if you sit in an economy where you don't know the exchange rate for the next few days, then you don't know where you are going. So it will help us to be able to forecast into the future, buy raw materials. The confidence level will also come back.
And Doc, that is where I'm very interested in, because I know that for a lot of your members, even securing international financing was a problem. With this level of certainty, the bit about the confidence and what that would mean for your operations in terms of the international lines being open and all the rest. What would that mean to you?
So let me look at the local confidence. People just go in here, in this country, change money from cedi to dollar and keep it. Why? Because they have lost confidence in the cedi. For money to have value, it must be stable. And so as long as our cedi wasn't stable and kept on depreciating against the FX, then it means that there's no confidence in our cedi. So people were just jumping in and changing money. In Ghana here, we don't spend dollars, we spend cedis. And so for somebody to hold that money means that he's keeping it either in his home, creating artificial shortage into the market. And people who really need the money to go and import will not be able to lay hands on them to import. Now with this, it means that there's confidence in the city. We are looking at interest rate also going down and other things vis-a-vis to run along with it, together with the stability of the city. So people who were going there, because they have confidence in the city, even if they want to make some returns or some margins from their deposits, then they'll rather go to buy some T-bill or raise it somewhere. So it means that we will not be struggling on the dollar to make it stable for us as for us to import. So that's confidence alone. That will let people run in for money would not be there. So that money will be left for us too. I have a friend who went to the international market. He had issues with his quarry. And I said, go out and seek support from outside. He went out and said, Ghana is not stable. Look, since 2022, when we're down rated, the credit institution, we had fees rating us from B to B minus, and then we have Moody from B to C, AA1 or whatever. So that alone tells the world that, yes, it tells
whether it's a C or B or D,
whatever, we were downgraded. So it tells the world that we're not good. We are not, our debt was not sustainable. And even like the two of us, if you have somebody who comes for money and pay, and somebody who doesn't pay, I expect that he pays higher interest rates. So one, borrowing from outside makes it very expensive for them to even get funds. And even the confident alone, my friend did not get any money. Now that the country is going to be rated high, I know that sooner we'll have a good...
Insider trading.
Yes.
You're picking up from the grapevine.
I know. So that when you go out, even when you get it, you are going to get a lower interest rate on that. And the credibility, people have there's a lot of direct investment, foreign direct investment that we are expecting. The uncertainty was there. They didn't even know whether to come into the country or not to come. Those that folded their business and went out, we are expecting them to come. And those that also want to come because they have money, but they want to look at a place that is stable, a place that they are sure that their business will stay over a long time and they will not run out with their investment capital. And these are of much concern to us. But for what we are seeing with the development so far, then I think that is good for the country.
Aren't you being too optimistic? And I'll be coming back, Doug, in terms of the expectation, but also to also be coming back to you.
I will let you know where we have a caveat after all these things. So
I'll be very, very interested. Because Alati also be getting back to you about the bit about in terms of this whole deal. You talked about the savings and whether we should expect the rating agencies to also respond with respect to what has happened. And also, it is an agreement in principle. The bondholders have not signed yet. Should we also be very careful in our excitement and all those things? But it'd be a good time to bring in an economist, Dr. Edu Sarkodie, in terms of the broader economy as well. There are some who are saying that, listen, hold on there. We are too excited about it because we have not ended the process. But for you, what would this mean for the larger economy in terms of, especially the bilateral creditors, now the Eurobond holders, and what this would also mean for our IMF engagement that tomorrow the board is going to meet on our program? Doc, thank you for your time so much. My first question is that for you, what could be the impact of this on the larger economy?
Well, thank you, George, and good evening to my colleagues in the studio and everybody around the world. Yes, you are right by saying that this is just an agreement in principle. And I think the Ministry of Finance, they have acknowledged that they are yet to solicit that of the bondholders. They call it the solicitation of the bondholders. So in other words, we have agreed in principle by the committee, but the bondholders must commit to it. And we are just hoping that the bondholders will commit to it. But the good to the larger economy, first of all, is the fact that Ghana needed to restructure our debt even before securing an IMF program. So that's why there was the need to start with the domestic. Then the IMF committed, and then we had to do the external as a condition for them to release the subsequent tranches. So the first relief for us as a country is that we are on course with the IMF program, and that hopefully by the end of this month or early next month, IMF will release the remaining tranche, the next tranche, I should say. And then also, I'm sure World Bank also commits. They have already made some commitments. I'm sure with this progress, they will continue to commit, all in the name of trying to relieve or release the pressure on government. Our debt has been unsustainable. We know I was close. If you add the off-budget borrowings, they were close to about 104% of GDP. So we needed some breathing space. And I think all this, as my colleagues have said, all these calculations will work to give the government some breathing space. If you go back to the budget, there are so many rigidities in the budget. In other words, there are some expenditure items in the budget that the government is obliged to pay. There's no discretion. Most of them, by the time the government finishes paying them, the entire revenue and grants are consumed. And these are the compensation of employees, interest payment, and then transfer to government units. So for us to get this kind of debt restructuring, it freezes or it lowers the rigidities in the budget. In other words, the amount of interest that we'll be paying is now smaller or lower than what we would have paid. So that is on the budget side. The other one is the release or the freeing of resources to other productive sectors. I don't know, George. I don't know if you can hear me.
I can hear you loud and clear, Doc.
Okay. So the next advantage on the economy is the fact that the government will not be paying this amount of money as interest or principal because of the restructuring, which has now become savings. Government will then be able to have enough resources for other or to meet other obligations. You mentioned $10 billion. And I think it's even the main document before we secured the IMF program. So this saving will be directed at meeting other obligations, i.e., most of the things that we have to accomplish in the developmental project we have to accomplish in the economy. So many of them, you can mention Agenda 111, you can mention road construction, you can mention railway development, you can mention, but on top of my list will be the agricultural sector, because even the 2024 budget has increased more resources, allocated more resources to the agricultural sector, just to make sure that there's food security. This is the last thing you want in any economy, that there's shortage of food. So agri, and then the youth also on my mind. So these savings can be directed at other pressing needs. Then there's the issue of the impact on the balance of payment, the monetary sector. If you take a look at the balance of payment, the trade balance, we have been recording positive trade balance, except maybe the year 2022 when we recorded negative. Ghana has been recording positive trade balance. In other words, we've been exporting more than we import. But within the current account, the trade balance is just a component of the current account. You see positive trade balance, but you see negative current account. What is it telling you? It is telling you about the burden of interest payment on government. So you export more than import in terms of any amount, and then you come to the current account and it's negative because of the huge interest obligations on government. So this will also help us correct all the negatives in the current account and help build reserve. The overall impact of that, if you lower the negative or even record positive current account, it will help Bank of Ghana to build more reserves. And as you build more reserves, you are able to secure the value of your currency, because then you'll be able to meet the demands for Forex, and your currency will be stable. We know
and Prof, and Doc, let me come in very quickly, because again, you talked about the currency. This thing happened on Monday. I mean, the minister was so excited. Some who said that, listen, the reason why the city had not responded was because of this deal not being secured. We've had this agreement in principle. We are yet to see that significant impact on the currency. It's been almost 3 days now. What is happening?
I think you have answered the question yourself. We are yet to see the impact, because we have not concluded the debt restructuring. It's just an agreement in principle.
But the minister was so optimistic that he was like, even immediately, the currency should respond. But it's not happening.
Yeah, I think the minister was making reference to speculative demand, because the financial market reacts to misinformation and disinformation. So when there's so much uncertainty about whether or not government of Ghana will secure the agreement, these uncertainties will fuel speculative demand. But so the finance minister was like, okay, now we are certain that we have the agreement in principle. So it will kill the uncertainties, and that will also eventually kill the speculative demand and also the misinformation and the disinformation around the whole agreement. I think that's the angle he was coming from. He didn't say that everything is okay now. So,
but Prof, again, Prof, again, and sorry for my rude intervention, please. From your independent analysis, for you, when are we expecting this to trickle? I mean, there's always a lag time. We've had an agreement in principle. When should we see this development impact on the local currency?
As soon as possible. We expect
as soon as possible, but since Monday, the currency has still been flat.
But it's better. I think the cedi might have depreciated, but it's relatively smaller than how it depreciated earlier. So yes, this is just the uncertainties around it, and then when the actual thing kicks in, I'm sure we'll have much better savings on our currency. Remember that we expect IMF to release the third tranche. We also expect the World Bank to release some funds. And I think the finance minister even mentioned that the release from IMF and the World Bank, I think from other partners, will amount to about $2 billion. This is aside the savings that we are talking about. This is an expected income inflow of over $2 billion from now to the end of the year. So from now to the end of the year, the release from IMF and the World Bank and other partners will really have massive or positive impact on the stability of our currency. In addition to this, we are going to have some savings through the haircuts in the external debt restructuring. So from now on through the end of the year to 2025, 2026, I'm positive that the cedi will experience some stability.
Sorry, again, I mean, the economists will always use the term all other things being equal. All things being equal, from July, maybe next week, should we see some positive reaction from the cedi in terms of the stability and even in some cases some appreciation?
As far as this IMF program and the debt relief program is concerned, I think yes, we should expect some stability. I think Bank of Ghana, the point I'm making is that it is not just one solution to the stability of the cedi. The IMF, they are playing their role. World Bank funds will play its role. This debt restructuring will play their role. And then the Bank of Ghana is also doing their, last time, I think you and I were on the MPC press meeting where the governor outlined a number of measures to make sure that we stabilize the cedi. And I think even the real sector players, agri sector, the Ministry of Industry, Trade and Industry, they are all to play their role in securing the stability of the cedi. So it is not just a one-size solution. It's not just one solution. There are just many factors that can help us stabilize our currencies. I will always also add the natural resource. I will mention the ownership of natural resources. I think that I've heard some politicians now talking about the ownership of our businesses. We cannot export $5.9 billion worth of gold and then retain only 1.6, with the remaining 4.2 being repatriated. If you own maybe even half of 6 billion, that's 3 billion. You may not even need the support from World Bank and IMF. So I will add the ownership of our natural resource to it, which will go a long way to help us stabilize our currency. And I think my brothers in the studio also mentioned the fact that some people demand dollars to pay fees, to pay for their hotel and the hostel accommodation, etc. So we live in a country where our legal currency is cedis. Why should we be pricing items in dollars and all that? So every other angle, every other variable is important to fight the cedi depreciation.
Prof, I'll be coming to you for anyone and any individual, even a child. When you get too much money coming in, then you want to go back to your budget. I need about 10 pairs of shoes. I need the bit about fiscal discipline, and I'm going to come to you on that one. But even before I come to you on that, Doc, also, I mean, all other things being equal, the IMF board is going to meet tomorrow. All other things being equal, and what we've picked up, they're going to pass Ghana on the second review and release that $360 million to hit Bank of Ghana's account. For you, as an economist, what would this development also mean for the economy going forward?
First is the cedi stability. We know businesses are really affected, and you and I, when we go to the market to buy, even the cocoa seller will say that, hey, I want to sell dollar or so, and increase the price of cocoa. So when the currency stabilizes, I think that it will control inflation. Is the reason Bank of Ghana has projected that the end of year inflation will be between 13 and 17% because of the expected relative stability of the currency. So we expect the currency to stabilize and also help fight against inflation. And then we will have the release of the tranche. Government already have their plans in terms of agriculture, releasing the funds to the investment in agriculture, investment in the youth programs. Government has a youth start where they want to support entrepreneurs who want to come out with their own businesses. So all these plans are there for the government, and I'm sure, like you said, it's likely they will release the third tranche, and this will go into the various programs that the government has outlined, and I'm sure going forward things will be better. The IMF has projected that we may return to the pre-COVID, achievements in terms of inflation, interest rates, stability of the cedi, economic growth, somewhere, ending of 2025, getting into 2026. So the part of recovery is okay. The economy is still recovering. But I think what we are all concerned now is the cost of living, the prices of items, and also the cost of borrowing. And I think my brothers from the business environment are very much concerned about taxes and the price of borrowing, the cost of borrowing. And those of us who are consumers are also concerned about inflation. And so let everything work together to control inflation, reduce, because when inflation is being contained, I'm sure BOG will start reducing their policy rates, which will impact on the cost of borrowing. And my brother Clement can borrow at a lower cost. And hello to my brother. We know each other very well. We haven't met in a while.
Yes.
So
yes, Doc.
Doc, I'll come to you on the bit about the fiscal discipline, but let me come back to this to you. And Mr. Latte, the partner at Deloitte as well. This is an agreement in principle. Yeah. Are we counting our checks before the lay or what? I mean, in terms of managing our expectations, this is just an agreement in principle. Have they signed it? Have they accepted the offer? Help us appreciate this process and whether we've gotten to that stage where it's more of a done deal.
Yeah, okay. I think it's a process of, we've seen similar process work out in Zambia and other places we've gone through. Yeah. So there's always the agreement in principle, and you go through the process of satisfying certain conditions. And then once you satisfy those conditions, it will be signed and put out. We've gone through a long period of negotiation. At some point, one of the thorny issues was the cut-off date. Yeah. The cut-off date was when we declared that we are not going to pay, we're going to suspend payment of interest and principal. That was our cut-off date. But obviously, over time, we were even struggling to agree on a cut-off date. And so all these negotiations have all gone on, and the external creditor committee or creditor committee members have all come to a conclusion and agree on something. So this agreement in principle, we know that, I mean, like you said, all things being equal, it will go through, and the board meeting is tomorrow. One of the things that will come out is that approval will also come with some form of agreement in principle or some approval in principle over. I don't think we should be so worried about whether or not it will materialize. It's gotten to the point where with only the last...
Isn't it fair for us to hold that hunch? That
ordinary...
The bilateral creditors are going to review the document to see whether there's that comparability of treatment and all those things. I know that even with this board meeting, I mean, there are pre-document that is already showing that the board has approved Ghana. So some of these things are just formalities, but shouldn't we just tread cautiously?
Yeah, so it is more likely that it will go through as opposed to there will be some adverse conditions coming up at the last minute. And usually, like I said, this has gone through months of negotiation. If there were significant or material issues, they would have come up. And those material issues have been resolved. You know, we had issues with whether China was even going to agree to the terms on the table. The OCC, the committee, the External Creditor Committee, chaired jointly by China and France, they have gone through this negotiation for months. And so at this point, I'm sure we are just at the tail end, have to satisfy certain conditions, and we go through the process of signing the terms.
You play in the investment phase, you play in the finance space and all the rest. And these things are not isolated. This development is leading to this board meeting that again, if what we've picked up is anything to go by, the board is going to pass us on the second review and release that $360 million to the Bank of Ghana's account. Again, in the investment space as well, in the finance space, movement of funds and all the rest, what would this development also mean when it comes to Ghana passing the second review?
And I think it's going to be a major milestone for two reasons. One is the stability of the currency, as has been discussed extensively. And
everyone
secondly,
is so optimistic, but we've
yes.
not seen. Maybe I'll come to Don for him to help me out in terms of the official quotes you're seeing outside and
yes.
what they are getting for business. But still continue.
Yes. And then the second one, it's our reduction in our debt profile. Remember, historically, it was like every quarter you go to the international capital market to borrow.
Yeah.
Now, that amount that you historically borrow from the international capital market is what we are getting every quarter under this IMF program. And does not have significant impact on your debt profile as an Eurobond or facility would have. Because you are not going to pay interest at 9% or 8.8% as you were paying under the Eurobond facility. So that's a very good thing, that you are making significant savings in terms of principal repayments in the future, in the current terms. And also the fact that you're going to get increase in your reserve. Economic Intelligence Unit actually projected that with this achievement, we are going to have increase in our surplus. So if you have increase in our trade surplus, then what it means is that you're going to have a lot of reserve that's going to back your currency. The way we've managed our currency has not been a full free market economy. Yeah. There is an interventionist market economy. So in certain periods where the central bank will have to intervene, they intervene. Either inject some additional currency in the market or try to mop up excess currency from the market. So there's always some form of intervention. I think that over the period, it hasn't worked really well because some of the factors went beyond our control. But with this stability, the speculative effect is going to be addressed. And that's why this was announced. It was so critical that this is announced almost immediately.
I've forgotten that because again, and I'll come back to Dr. Macroeconomic because he is on the business front, and sometimes we would do just the classroom or textbook analysis, but he is on the ground there. I mean, have we seen that speculative challenge being dealt with because of this announcement? When I look at the currency movement, I haven't seen that.
Yeah, so I think our market has not gotten to the level where you say information or misinformation almost instantaneously affects development in the capital market. So there's always that lag. There's that gestation period, and that takes a bit of time. So I'm just assuming that in the next couple of weeks, you see the impact. Because what it means that some people have locked up, or have locked their investment, have locked up certain exchange and their swap rates. And those ones run for about a week or two. So it won't happen almost immediately that it was 15 yesterday and tomorrow we are going to see 13. It doesn't happen, and I'm sure over the years you've not seen it happen almost instantly like that. It takes a bit of time. But what it means is that it's going to taper down over a certain period. We were going to a period where we are going to see significant rise in the exchange rate because we are getting to the end of the year.
There are projections about 20 Ghana cedis and all the rest.
And that was actually going to be a worrying concern for us, and it's going to affect us adversely because one of the risks that international watchers like the Economic Intelligence Unit projected was that if we had missed this debt restructuring timeline, our economy was going to head towards the wrong direction.
Doc is shaking his... And Doc, I mean, help us because what are you getting on the market? I mean, you are the real businessman in terms of the currency. There are some who are saying that we're so excited, but we've not seen that excitement reflect on the currency market. I mean, you are a businessman. You do transactions every day. What has been the case over the past 1 week?
Okay, so the market is not so sensitive, though, like you said, it has a time lag. But recently, we're buying dollars around 16. And then, I don't know, I can say it was more speculative. Then the Forex Bureau decided not to even
publish.
No, not even sell, buy dollars.
Oh.
Why? Because they saw that the dollar was going to go down. And you saw that immediately after a week, it came back to about 15, down there to even 14 point something. Then it started going up because that wasn't the normal demand for dollar to get its equilibrium. Yes, to come back to that, the economy has seen some growth. within the first quarter. Yeah. Just as the first one, when I said, you said, oh, we haven't seen anything. Yes, we have seen some growth. We saw industry moving about 1.6 during the first quarter. We saw inflation moving now, it's around 23.1. Service was about 1%, and then agri about 2%. And there have been some gains within the first quarter. And that brings us hope with what we are getting now. With like I said, it's not so simple, but we know certainly that this deal will be a done deal for us to get those gains that we are getting. But the caveat here that I want to say is that all is not well until the fiscal and monetary policy come to play. The discipline. Yeah, it must work hand in hand. Just as Dr. Sarkodie said, we all have to be involved in taking those, making sure that it works. Now, after we have even gotten all these monies, this relief, we have to look at how we can sustain our economy. We have to look at how we can do more export, because we still have the burden of paying those monies. It's still there. And so we have to look at our export, especially the forex, the external ones like the gold, cocoa, bauxite, diamond, even if lithium, oil. We must look at how we can sustain it. And so that the government will be prudent in whatever it spends. It's not that if you have the gap, it must be spent.
But Doc, let me just a quick pulling back as well. So from your end, in terms of your transactions and your demands and all the rest, there has been some relative stability of the Ghana cedi for your business.
Within this year.
Based on what has happened.
You mean the recent one?
Over the past 2 weeks,
the fact that it is not depreciating more. And it's
at least
stable,
the rate of depreciation has slowed significantly.
Means that there is a gain. It might not be.
And are you optimistic going forward that at least we will see this development impact? Because for you,
I'm very optimistic because looking at what is coming on, there is no way if government works well with it and decide to be disciplined that we will not be able to sustain this gain into the future. We'll have to maintain our middle income economy into the future.
Would this help some of your other colleagues who had shut down and scaled down to come back? You were telling me that some had...
They will come back because anytime...
How bad of the situation that they had to take these drastic decisions of scaling down,
no private...
letting people go home and putting the monies in treasury.
Every private person is not a Father Christmas. It's a profit maximizer.
Yeah.
And nobody wants to lose his capital that has been invested in a business. And so you look at the alternative. So for me to employ people to come to my workplace, and some will be stealing, I will not even be able to forecast. As a businessman, I should be able to know the profit that I can make at the end of the year when I have a budget. And I'll follow the trend to see whether I'm doing well. If I'm not doing well, I cut off my losses. You might be renting an accommodation for your business, paying your workers. You cannot even forecast the next exchange rate for you to be able to plan. Planning was...
That was how bad it was.
It was, yes. So then, as somebody who have come into our country, that is why I'm saying that Ghanaians do not have anywhere to go. No matter how the situation is, we want to hold on and improve on our economy because we believe that there are better times ahead. But foreigners, when they come in and bring their capital, they don't waste their time. So they'll go to the market, and when they are repatriating their capital, it's the same currency that they brought that they repatriate. Go and exchange money from the market, and then repatriate it. Some will even go through the crude method, will not use the normal trend where Bank of Ghana will be able to monitor those transactions that have gone.
But they were complaining that the documentations were too much. They were complaining that, and that's why Bank of Ghana has come out with it, that the documentations for the pre-advance payment for imports was too much that it is easier to go outside the banking system and to get your stuff. Go to Kojo Mansa, maybe Cowley, and pay the money to you, and you travel to Dubai, do the transaction. That was the problem.
We need to look at it because most of the money that goes away from us, the FX, are from the petty traders who even travel to Dubai and other places. They hold specific amount, even if it's $10,000, and you have about 2,000 people traveling at a go. Just multiply it and see how much money that goes out of the country without knowing it. And this market that we live in, just as he said, a free market operation, the country, we need to look at certain policies that we put in place. We have people from other nearby countries who come in to buy dollars and send it. So we are operating with Niger, Togo, Nigeria. They come in here and buy huge dollars. When they realize that their place is not in their dollar rate over there, the exchange rate is high. So they are trading within all the market. If we are not able to close up the gap, whatever money that we put in, we will not be able to manage it because we don't have control of it. And I think that the government, like he said, some policies will have to be put in place to make sure that those monies that are repatriated, that are taken away, either from churches, either from businessmen who come in, whatever it is, we'll be able to manage it within our economy. Otherwise, we'll lose it. But I think that the future is bright. And I want to assure Ghanaians that we should stick to our business and see what is ahead. What we have gotten happened when we had President Kufuor came in with the debt relief, what's the name? The HIPIC fund. Yeah. When we have some extra money to spend on other things, some productive sectors, and we're not even using it to finance the debt that we have. So it's a big relief, but we need to sustain it into the future in such a way that we don't run into that mess and learn our lessons very well. But I think that going forward,
with this development again, and come back to businesses as well, will we see the unwinding that if what we are expecting happens, the businesses who had to scale down will see some revisions in their outlook and all the rest, if the interest rate is also going to improve and even inflation is going to go down, are we going to see businesses react positively by calling people they've asked to go home to come back as well?
Yes. I think it will react positively. When you have interest rate low, means your cost of funds are low, you'll be able to, in future, you'll be able to sustain your business, employ more people, and then even expand your business because you are seeing growth. And margins will also increase as a result of that, because if the cost is low and you are relatively getting either the same or increase in revenue, then you expect that your margin is growing. When you have those margins growing, it means that the business is also growing. So you expand, you employ people, and that will be good for the economy. You pay tax to the government, etc. So for me, the private sector will have to hold on. We have done a lot up to this time. And once we have seen some sustained growth from the beginning of the year, I think that this one even added up because already we're getting some little growth from the first quarter up to this time. So with this in addition means that there's a focus for the nation to move into a better economy between now and probably the next 2 years.
Let me come in here. And again, coming back to the question about the fiscal discipline. Again, the bit about deferred payment, it means that from next year, all things being equal, you're going to start the payment. The finance minister has been talking about a sinking fund. What should be the approach going forward? And I'll come to a doc as well. And from you, a finance person, the bit about the fiscal discipline, establishing a sinking fund, how are you going to start making the commitment now to this fund so that when the time is due, we will not take another shock? Because there are some who also think that, listen, well, the light is far away than as soon as things turn around. There are some who are not that optimistic because we know what the politicians have done to us in the past. Yeah, Mr. Latte.
Yeah, so I think what it's worthy to note is that as part of the publication of the press release, there was a statement to the effect that the agreement involves some non-financial provisions which are aimed at improving fiscal transparency and sustainability. What does this imply? And I'll ride on what I've seen in other countries. So in Zambia, for instance, there were two things that happened. The first one was that they passed what we call the Loans and Guarantees Act. A lot of the borrowing that has happened in the last 5 years, significant borrowings. The question is, like we say in the Ghanaian popular phrase, where's the money? It's kind of way.
HIPIC benefit, I know.
The Euro bond that we've had in the last, the question you ask yourself, where is the money? What has it been used for? So that law was passed over there, the Loans and Guarantees Act. You go through about 5-stage approval. You don't just take to Parliament and then before you realize it has been passed. You go through a number of processes just to improve the transparency, just for people to question what the money is going to be used for. So going forward, you won't just borrow. We would have to pass similar act to ensure that when we are going to the international capital market, we are going to borrow 3 billion, and it's going to be used for a particular project. And that project is going to be realized in the next 2-3 years. You're going to see it happen. We borrowed on the back of certain projects, but today we can't find those projects.
Yeah.
And I think that's a bad thing we have to correct. So if fiscal transparency or fiscal responsibility and transparency in our borrowing is going to improve, that is going to help us. The second thing I've seen also in other African countries that has gone through this process is what they pass something to regulate their procurement of goods and services. That's also another area of leakage. We've always found that some of the procurement do not give us value for money.
Yeah.
And that's a waste of resources, because if you are bringing all these billions you're excited about and they are going to procure goods and services that we don't need or that are substandard, that's a waste of resources. So these non-financial provisions, we expect them to be translated into laws and regulations. And we not just want them to translate into laws and regulations, but laws and regulations that are going to be operationalized by the municipalities, departments, and agencies. We want this to be run through all the departments and agencies so that we are not just procuring for the sake of procuring, we are not just paying for contract for the sake of paying, but we are getting value for every dollar that we are borrowing. We are getting value for every dollar that we are spending. If that is done, it will help us. And I think you asked the question about the future and the long-term effect, whether this thing is not going to happen again.
Yeah.
Look, the two options that are on the table, you have the DISCO and you have the PAR. Someone who has chosen the PAR has 17 years. The risk for that person is that there will be no debt restructuring in the 17 years that you have chosen to restructure your debt. What's the guarantee? And the only way you do that is for government to institute the right policies, the right discipline, and for the external credit holders, including the World Bank or the IMF, to also help us pass these laws that I've mentioned. If you don't pass them and you don't force to operationalize them, government will suspend them or they will apply them as and when they wish. And a very good example is our Fiscal Responsibility Act. We are supposed to operate with 5% deficit.
What has
happened?
So the problem is not the law, some will say. I mean, in school, in our finance and economics class, they always told us that the person that never default or never default on their debt is government. What happened 2 years ago has eroded or erased that thing we had in our heads.
There's a bigger question now about what you mean by a risk-free rate, whether there's even a risk-free rate at all.
Based on what has happened, there is nothing like that.
Advanced economies were defaulting. There were challenges in the US
Greece
market.
And the rest.
Yes, we've seen them defaulting in the past. So the question about the risk-free rate, and I think that's a very good question to ask. What's important is that for us as a people, what do we commit to? I think we should commit to what we want. And I think it's not just about passing the laws, but also ensuring that the laws have been operationalized. Because what we've done in the past is that the taxes that have been implemented that we hear every day being introduced, some of them have been in our laws for years, but we never implemented them. We talk about property tax and
all those things, but that doesn't happen. Let me bring in Dr. Dusa Kodi as well. The challenge for many is about the fiscal discipline. And I'm just saying that, listen, just like any individual that you are now having a lot of money coming in, you're not even asking yourself, oh, that shoe that costs about $10,000, I should go and buy it. For you, what should be done now, and not the law, so what should be done now to ensure that with all these inflows that are coming in and all the rest, that we have commitment due next year, what should government be doing now?
I think we have to just prioritize. That's the basic principle of economics, that your wants are many, but the resources that you need to meet them are limited in supply. And therefore, you have to draw your scale of preference and prioritize. And as a country, we must get our priorities right. So that's the first point. Secondly, we have seen instances where even in an election year, there have been some discipline. In 2004, government was disciplined even in an election year. In 2016, the IMF program was still there. So I'm not sure we should be that afraid that there are too much expenditure overruns in 2024, because we still have the IMF program here. The IMF staff will be coming here for their periodic investigations, and the government shouldn't put the whole thing into jeopardy. We must try and consolidate the gains and get more gains. I must acknowledge that if you look at the figures, more than 70% of the fiscal consolidation that we're supposed to achieve for 3 years has already been achieved in the year 2023 alone. In other words, the design of the program itself has made some allowances for increased expenditure in this year as an election year. I'm sure your question is really making reference to this year as an election year. An allowance has already been made. If you take a look at the figures, they've already made. And that's why in 2023, they actually front-loaded. It was a large front-loaded fiscal consolidation. That's how the term, large front-loaded fiscal consolidation, pushed everything in 2023 and allowed some freedom in 2024 without jeopardizing the entire program. So all these allowances have already been made, and I'm not sure the government will go against this. Then we come back to the, so I've talked about priorities, I've talked about the presence of IMF, and I'm talking about the Fiscal Responsibility Act. My brother made mention of it. I don't believe that the 5% restriction is enough. I don't believe that it's enough. We must put some stringent measures, on the revenue side, on the expenditure side, because you can get your debt restructured, but if you keep borrowing, the debt will rise again.
Which is happening, actually. There have been some borrowings over the period.
So the target that we have set for ourselves by 2028 to get a debt to GDP ratio to be about 55%, it means that there are so many things that we have to do from now to 2028 and stay on the path to reach that. If we don't discipline ourselves and raise enough revenue and manage our expenditures well, we may not get there. And when we get there and our debt hasn't come to sustainable levels, we may not also even get the help. So the three main drivers of the public debt, they are the budget deficit, which is accounting for about 48% of the development of the public debt. Then the off-budget borrowing accounting for about 23% of the development of the public debt. And then the exchange rate accounting for about 29% of the development of the public debt. So this is it. First, the budget deficit. How do we narrow the gap between revenue and expenditure? Ideally, the tax revenue must grow by 2.5 times the GDP growth. I repeat, ideally, tax revenue must grow by 2.5 times the growth of GDP. So if your GDP growth is, say, 5%, so that's 2.5 times 5%, we are talking about, 2 times 5 is about 10, and you're talking about 12%, 11% of growth of revenue. So there's a lot we can do because the tax system must respond to growth, and growth must respond to tax. So we must design in such a way that we can get enough revenue from the growth without necessarily burdening the few people who always pay and pay and pay and pay. So we must design, and I'm happy to hear the two flag bearers talking about amnesty, simplifying the tax. If you listen to Dr. Clement and Buta, they are always talking about simplification of the tax system, how one tax can be interpreted differently by the GRA officials and also by those who are paying it. It should be simplified. So the revenue side, not only tax, but other non-tax revenue, like the natural resource, we are collecting 5% royalties, and it's a shame. As a country, we should do better. We cannot be the #1 producer of gold in Africa. Last year, you produced 4 million ounces of gold, valued at almost $6 billion, and you are charging 5% royalties. That's a shame on us as a country. So the non-tax revenue element, we must look at it and where we can get more revenue. Then on the expenditure side, my proposal is that within the Fiscal Responsibility Act, we must also put some caveat or some restrictions on expenditure, because if revenue is growing at a certain rate, the expenditure, my proposal is that the expenditure must not grow or must not outpace the growth of revenue. For example, if revenue is growing at, say, 10%, expenditure must grow less than or equal to 10%. And this is where the discipline comes in. So you can go and promise your constituency, but the Fiscal Responsibility Act will restrict you by saying that, hold on, you can do all the promises, but this year we cannot grow beyond the growth rate of revenue. When we do this as a country, I think we should be able to manage this. We are just 33 million people, and we have a lot of resources. And I go back to my natural resource argument. Look at the number of natural resources that God has blessed us with. Gold, crude oil.
There are some countries that do not have at all. But, Prof, I want you to hold on quickly. This is PM Express Business Edition. Let's look at the debt restructuring deal, the impact on businesses and the larger economy. We take a quick break, and we will be right back. Welcome back to PM Express Business Edition. Let's look at the debt restructuring deal the government has closed with the bilateral creditors and also the Eurobond holders. And what could be the impact of this on the larger economy and also businesses? What would this do in terms of the confidence and all the rest in the larger economy? Dr. Clement Marco is the president of the Ghana National Chamber of Commerce and Industry. Yolate is a partner, the accounting firm Deloitte, and also economist Dr. Edu Sarkodie joining us via Zoom. And going forward, as you try and wrap up on this discussion, I mean, for you, Mr. Lati, are you expecting the rating agencies to also respond as well? Because for the businesses, I know they always tell us in finance that you can never get a better rating than your sovereign. But in Ghana, we have Cocoa Board and the others getting a better rate than the sovereign. I mean, should we expect them to also respond? Because for Clement and Dr. Clement and his members, it's very, very important for them in their transactions that they'll be doing as well.
Yes. I think we have to look at the 4 or 5 key drivers of the downgrades that we went through in the last couple of years. So the first one was our low revenue base. We had significant low revenue base. We had our rising debt levels. We had slowdown in fiscal consolidation and a widening budget deficit. These were the 3 or 4 factors that caused the downgrade. Now you ask yourself the first one, the low revenue base. We've made some attempts to increase our revenue, particularly enforcement of tax laws. Largely, we've made some achievement, we've made some gains, but obviously not sufficient, or it's not gotten to the point where we would have loved it to be. And Doc mentioned about 2.5% that your tax revenue should be growing again. I don't think even our tax efforts compared to our peers who are 18%, we are about 13, 14%. So it means that tax to GDP ratio is still low. So there's still some effort, but I think we've made some progress. So that should result in some kind of positive grade from this rating, positive rating for the rating agencies. The second one is the slowdown in fiscal consolidation. The IMF program came in on time, and I think that has helped us because our budget deficit was widening. COVID, we hit all the way to 13%. And if you have a fiscal responsibility out of 5% as a benchmark and you are 13%, you are over and above what you're expected to do. So that slowdown in budget deficits also has helped. And then the last one, I would say, it's efforts at maybe reducing our debt burden. So these 3 factors, they are all going in the positive direction. So I expect the rating agencies to come back with revised rating and, of course, positive rating. We went all the way close to junk status, which was so bad. And I think over the last couple of months, you've seen some improvements. Some of them are even announced all the way to stable. I think we should stay as stable. When we stay as stable as sovereign, businesses will borrow, especially those who borrow from the international capital market. So if government is not going to the international market, business in Ghana here go to international market to borrow in foreign currency. And there's always reference to the sovereign rating. So if the sovereign rating is so high at 30,
the principle about not getting better than your sovereign,
it only applies to certain companies. So you can even make an argument that even the US economy, Tesla can borrow better than the US government. Because it's a highly rated entity. You understand? So in the same way in Ghana here, you have companies that are well run, well managed, and they can borrow at a rate that's
maybe like Doc's company as well. Let me quickly go to, as you try and wrap up, let me go to Dr. Edu Sarkodie as well. As you try and wrap up, I mean, we know what has happened over the past 2 years. When it comes to fiscal discipline in an election year, going forward, can we trust government to exercise that in the midst of this debt restructuring program, the inflows that are coming in?
They have no option. The government has no option. Politically, they want to break the 8, so they have no option than to be disciplined. Economically, they are still with the IMF program. you are soliciting the support of bondholders. My brother mentioned sometimes up to 17 years, they're going to be there with you. They wouldn't want you to mess up. The World Bank are there with us. Other private investors are with us. I'm not sure they would want us to mess up. And I don't think that, because the projection is that we must be on a certain trajectory and reach 55% debt to GDP ratio by 2028. We must not jeopardize that. We must commit and be disciplined and stay on course so that we can achieve whatever we want to achieve by 2028. There should be. We have no option as a country than to be disciplined and to be politically suicidal if by December people are going to vote and your exchange rate is at 120, the inflation is at 50. So it should be politically suicidal to them to mess up. And economically, I'm sure because of the presence of the IMF and all the other pressure groups, as you call them, the government will not want to go beyond what it has budgeted for. I want to also add my voice to the fact that another proposal is that beyond the discipline, and I mentioned prioritizing our expenditure, whatever we spend on, we must make sure that it generates future revenue. Whatever we spend on, we should be certain that it should generate future revenue. For example, I think government has made some commitments on digitization and digitalization. What stops us as a country, or from us, stops government from leveraging digitization to raising revenue? Why should somebody be going to Makola market to be collecting cash? Why would somebody go to somebody's house to collect property rates in cash? Well, let's leverage. We have invested so much as a country into digitization. Let's leverage it to raise revenue, do away with corruption, do away with middlemen, do away with interpersonal relations. So whatever we spend on, we must make sure that we will get future income from that investment. And then maybe finally, George, Ghana has Heritage Fund. The Heritage Fund, according to a report I read, we are earning just about 1 to 2% on the Heritage Fund. The last time I checked, it was $1.2 billion. Maybe it's higher by now. When the US inflation is higher than 2%, it means that we are getting negative real returns on the Heritage Fund. Why are we doing this to ourselves as a country? I want to begin the advocacy that we go and bring back the Heritage Fund and invest in something tangible for the future generation, because the argument is that we are saving it for the future generation. And the future generation do not have food to eat, their transport system is bad. What stops us from going to withdraw the money, bring it home? If it's railway, invest in railway. If it's road construction, prioritize road construction. If it's education, building, finishing, or eliminating all schools under trees, because that's the future. The future are studying under trees, and you say you have saved money for them abroad, any negative real returns, go and bring it home, put up a structure for them to study in that building.
That is another debate we have to go all together, but thank you, Doc. I mean, your final words, I mean, you're allowed to, as we wrap up, in terms of going forward and keeping on that trajectory where some will say never again, or your final words.
Yeah, so I think we've emphasized the fact about fiscal discipline, and I think we should all commit to that. It's an election year, yes, but if we are committed to getting the right things done. We moved away from a similar system in 2017, 2018. Our economic indicators were one of the best that we've recorded. The same way, I expect that when we get to 2025, 2026, we have one of the best indicators. We have a target we are working to, 55% of GDP. We are not there yet. There are some risk in the numbers. One of them that we expect to be coming up is the proposed debt restructuring, or like a third phase of it. We hope that this time the communication will be properly done, the process will be transparent, and we will involve all the stakeholders so that at the end of the day, we all commit to achieving something that works for everybody. We are just not interested in a win for one party or one side. We would have to get all the stakeholders into the room, speak to it, agree on a program that will work for all of us, and then we achieve.
Doc, before I get your last word, I know your organization is Ghana National Chamber of Commerce and Industries. Let me get your thoughts on this issue. the seemingly price control of cement products in this country? The industry bit of your organization, what are your thoughts on it? There are someone saying that we've moved away from price control. We shouldn't never again. What are your thoughts on it, Doc?
For me, I believe that demand and supply must equate for us to have a price. We live in a liberalized economy. And so when you talk about price control, it has this ripple effect. The government, the individual goes to borrow money at a very high rate and then employ people to work with. Allow them to fix their price because we are in a competitive market where others too, if you want to look at the number of cement factories, they are not one. About 3, 4, 5, 6, a lot of them. Each of them wants to maximize profit or make sure that they have their price is quite reasonable for them to have the demand and produce quality goods. And so you allow them to determine the price. When the economy is good and everything is going on well, you don't need to intervene. If you do that and they even want to fold up, where can we get this money? Are we going to import with our foreign, the little effects that we have? It must be left open for them to compete among themselves. I don't believe in
price control.
Price control.
But Doc, your final words on this whole debt restructuring and businesses.
We've been at this place before, especially during President Kufuor's time. We saw a cedi equating $1.
Someone saying the correction is taking place.
Where are we after how many years? So it's possible that we can get back to where we were. But it's a lesson for all of us to look at the fiscal discipline. And private sector must stand tall to talk to government if you are not doing well.
Speak truth to
Whoever
power.
comes in and speak truth to power. Because at the end of it all, it is the private sector that suffers. And so we need to be very strong enough, come together as a private sector to stop government from overspending. And like he said, you prioritize your needs in every situation. If you don't have the money, you have to prioritize your needs. And when we do that, the private sector is here. And we want to assure you that we can expand the economy.
The real engine of growth,
there will be growth, we expand the economy, create jobs.
And of course, time is not our best friend. Dr. Clement Amaku, he's the president of the Ghana National Chamber of Commerce and Industry. He joined us in the studio. Yolate is a partner at accounting firm Deloitte, and also economist Dr. Du Susakwade on via Zoom. I know the debate will still go on in your offices and in your homes about whether indeed the outlook is good, is favorable, and whether government will remain or will be fiscally, if I can use that expression, disciplined going forward. Have a great day. This has been PM Express Business Edition.